So what we're looking at here is a one-day chart of semiconductor ETFs, PSI, which for some reason the one-day chart is not loading, SOXX, SMH, and SOXL. The first three are 1x ETFs, and SOXL is a 3x ETF for semiconductors. On a day like today where the sector did bad, SOXL did terrible, horrible, disastrous. When we zoom out to the 5-day, also, there were a couple of up days, but it ended up worse by far than its peers. Zoom out to 1 month. We can see now during the month of April 2021 anyway, there were days where SOXL did amazing, but the volatility swings are incredible, being, again, a daily reset 3x ETF. As high as 26%, but then, by the time we end the month, it's really just in line with the others. The other thing that stands out to me a little bit is PSI is showing itself to have some alpha over the other two, which is interesting because I at least had not heard of PSI previously or been aware of it. But being a quant fund, perhaps it is using a superior trading strategy. We zoom out to 3 months. Again, the volatility swings are just outrageous for SOXL. If you happen to pick the perfect day, of course, you can get outsized returns. But here's the thing, you look at a chart, well, let's zoom out to year to date. Also SOXL, somewhat better, but you're taking on incredible risk in order to do it. By the time we get to the 1 year, we see, okay, that's a lot of separation and difference. It's quite amazing. And then we go to the 5 year and it's almost unbelievable. If you're looking at long-term charts like this, it makes you want to get SOXL. But the problem is when you're zooming in and day out, you can be up or down, as much as 50% swings, within a 1 or 2 month period. And so to me, there's two takeaways from this. One is a chart only helps me to the extent that I bought the entire position on the first day of that trading period and then did nothing to it, and I still hold the whole thing. But if you manage your portfolio the way I do, you have stop loss orders, you see things, you make adjustments, you see declining, you capitulate. It goes up, you want to buy it, and then it goes back down. And as a result, you just lose money. And so that's the first takeaway for me. I need to remember that. Second thing is I am a little surprised by PSI, right? This is a 3 month chart. The others are 5 and 6% returns. PSI is 9 on a relative percentage comparison. 9 compared to 5 or 6. It's much better. And so I will be ditching SOXL for the foreseeable future until I can get to the point where I can just buy something, not put any stop losses on it, and trust that I can look at it again in 5 years and it will be up, 2,400%. But meanwhile, with normal trading, I think I'm going to move to PSI. In the shorter term, seems to be performing much better. And as I trade a little bit more frequently, I'd rather get the alpha compared to the others, and with a much better overall risk reward balance compared to SOXL. Thanks.